Let's also bring on board Mr. Akshay, Bhagwat, Senior Vice President, Derivatives Research at JM Financial. Thank you for joining us this morning on News 9, Akshay. I want to begin by asking about this range that we have been talking about for at least for the last 3 or 4 sessions. Nifty had been trading in a range of 21,500 to 750. But if you look at the action in the past 3 sessions, we had been making lower highs and lower lows. Is this a sign of a bearish sentiment taking over?
Good morning, Suyash. Look, I feel this is a breather which the market is taking for the January series because November and December, the market has moved in exuberated zones. It's an overheated market, so it's naturally cooling off. We do not see any signs of reversal as yet. There are no panic signs on the street. It is just that the last couple of days have been a bit disturbing on the volatility front because you have seen extended moves of over 200 odd points in the Nifty index and even as a matter of the fact, the banking in the Nifty index. Now we play by the levels. That's what I would suggest. Now 21,500 here has special relevance. Even if you look at the opening trades today, we have just broken below those levels, but are again managing to hold on to those support levels. So let's play with the range. It's a range bound market, as I understand. Still, there are no major panic signs as yet. Even if market were to break 25 to 500, doesn't mean that there would be a major sell-off. It's just a temporary cool-off, which I understand, considering the fact that the markets have had a fab bull run in the last couple of months. So the levels to play for the Nifty, supports of 21,500, resistance of 21,750. No major disturbing signs of yet. Yes, it's a subdued month. Be stock specific. That's the flavor for the January series.
All right, be stock specific. That's the flavor for the January series. But also wanted to touch on the banking pack. After November and December's run, most of us were banking on Nifty Bank to drive the markets higher. But the segment has underperformed, like so far, at least in 2020. And this is after the valuations have looked reasonable. The sentiment was also turning positive. Why do you think we are seeing such, divergence in performance and valuations in the Nifty banking pack? And what's your, view on the banking pack for this week?
For the bank index, yes, compared to Nifty, Bank Nifty has taken a slight hit. It's been an underperformer since the beginning of the January series. But broadly, if you were to look from a weekly technical chart structure, still I do not find any major disturbing signs or reversal signs of the bank index. It's just that, if you look at the way the bank index has moved, we have been much used to seeing strong upsides, and even small corrections are disturbing for us. That's the sense I draw. Otherwise, there is a very strong support zone at around 46,800 spot levels for the banking index. Roughly 46,800, 46,900 is where it can hold. Today is the weekly expiry for the bank index. So 47,000 should hold. That's my understanding looking at the way the derivative data suggests for today's expiry. It will be a small gradual upside move because, the momentum is lost. That's one key takeaway for me, both for Nifty and Bank Nifty. The momentum is lost, so it will take some time for the Nifty or Bank Nifty to gather its ground and again then stage a rebound, maybe in the second half of January. So it's a range bound market, no need to panic. I think eventually things should settle down and normalize as before.
Good morning, Akshay. I'll drive your attention to another stock that has been gaining and has touched a 15-month high, at, almost touching 200, the 200 mark. That is FSN E-Commerce Ventures, the parent company of Nykaa. It gained for a fourth day in a row, gaining almost 15% and touched the intraday high yesterday of 191. Today it is, as we speak, it's at around 194. Now my question to you is, would you still give it a buy recommendation? What's the price target one can look at now for Nykaa? Still 250 around?
Yes. Firstly, the FSL First Source Solutions 190 is the current market price. But here, on a technical perspective, if you were to look at the broader or the weekly or the monthly charts, it is almost near the resistance zone of 200. Now, 200 would have special relevance if you are a short-term trader because these levels were revisited in November 21. And after that, we did see some significant correction in the stock. So there is a good chance you might see some cool-off in FSL at the current current levels. So fresh entrants in FSL might give this a miss at the current rate. I would be more keen on Nykaa as a stock, because here, the stock, if you look at Nykaa, it's a one-way rally for Nykaa. It's been 8 months of move, which has seen a very strong up move and setting up a base at 190. So yes, 230 to 40 should be on. Support is 180. Continue to hold fresh buy entrants. Wait for a slight dip. 185 should make it more, good from the risk reward payoff. 180, 85, your fresh entry. Otherwise, hold this for target of 225.
The markets have been rather choppy. One day we are down, the other day we are up. In a market like this, what would be your short-term trading ideas or short-term trading bets?
Yes, still I would be like to be on the buy side of the market. Now, considering the fact that in my opening remarks I said it's still a stock specific market and momentum is yet there to be chased. So a couple of stock recommendations, which is from the pharma space, I would be keen on Divi's Lab and Cipla. Divi's Lab already has staged a breakout, and the momentum indicators should regain. That's the sense I derive looking at the derivative and technical parameters. I would recommend buying Divi's Lab at the current rate for a target of 4152 with a stop loss of 3895. Second trade is Cipla. Again, we did see a breakout a few trading sessions back. Supports revisited in the last couple of days. Corrective action again is a good stock from a momentum pickup front. Consider buying Cipla at the current rates. Target 1342 with a stop loss of 1262. And IT pack here somewhere I think is going to lead the sector-wise action, because the results will kick off from next week. Here HCL Tech is a strong pick from my side, because the technical parameters are good. Derivative indicators are suggesting buying activity. Buy HCL Tech for a target of 1497 with a stop loss of 1428.